In the previous video, we explored the following simple trading rule and exponential weighted moving average crossover, EWMAC. The trading rule is useless without some price data, so let's import crude oil futures data. From sys data, import CSV futures sim data, assign the sim data to an object called data, set the instrument code to crude oil futures, crude_W, assign to an object called price the daily prices of our sim data for the crude oil instrument, and finally reduce the length of the price series so that it runs only from January 2020 onwards, just to keep the rest of this workbook a little cleaner. And finally, in this cell, we will run the calc EWMAC forecast function, the function mentioned here and which we discussed in the previous video. And we will feed it the oil price, and we will set the look back window of the faster moving average to 32 days and the slower moving average to 128 days. And the resulting volatility adjusted forecast, which I've highlighted there, that is assigned to EWMAC_rule. Shown below are the forecasts that we generated using that trading rule. Evidently, this trading rule wants to be long crude oil most of the time. Certainly in 2021, it wants to be long based on the fact that the curve is well above zero. EWMAC rule.plot. Here are the raw values of the forecast that we generated, the first 15 rows. It's not surprising to me that the first 10 rows are blank, because as I recall, the forecast function up here, it does require a minimum amount of data to actually generate forecasts from, and I believe that minimum was 10 days. The following code tells us about the performance of this trading rule. From systems, import profit and loss for instrument forecast. The name of this function is very intuitive. Profit and loss for oil futures, exponentially weighted forecast, exponentially weighted moving average crossover forecast in our case. So we run that function, feeding it our trading rule and the oil price, and the result we assign to an object called myAccount. What exactly is myAccount? Well, type myAccount tells us that it's something Rob has called account curve, and I believe account curve is actually a Python class. If we run myAccount, just straight up run it, by default, I believe it shows the daily return on our trading rule net of costs, and I'll try and provide proof of that later. I'm afraid I don't know why we have blanks for the first 13 rows rather than just the first 10 or 11 rows, because I know for a fact we do have oil prices for these days here, and I know we do have trading rule forecasts for these days here, so it's curious that myAccount has not generated any assessment of the trading rules performance in these days. Look here, myaccount.net shows the exact same as if you had run just myAccount. So my point being, if you don't specify net seems to be what you get anyway. myaccount.plot shows this, shows a wide mix of winning and losing days. What precisely is the y-axis showing? I think it's showing percentage daily returns from our trading rule. To try and provide proof of that later. myaccount.percent.stats returns a bunch of interesting statistics based on our trading rule. Those statistics being listed here: median, mean, standard deviation, skew, etc. Note, if I had run myaccount.stats, so I hadn't bothered with the word percent, the numbers here would have been identical. So it's in the same way that it appears net just goes without saying, it just seems to be the default setting. I think the same could be said of percent. It appears to be the default setting. What I'm going to do in the following cells is I'm going to cross-reference the figures generated here with some simple lines of my own code just to double check that I understand where these figures are coming from. So imagine that we take the object my account and turn it into a pandas data frame just so it's a bit nicer to look at. That's what I've done here, and I believe this column is showing the percentage daily returns for our trading rule, like I mentioned. And my presumption is that .stats is simply applying these statistics, standard deviation, mean, max, min, etc., against this column of values. And I'm going to test that. If I print the minimum of this data frame, I get minus 3.2. If I print the maximum, I get plus 2.5. And that is what we get up here, minus 3.2 plus 2.5. Similarly, if I generate the cumulative sum of this column, well, by the end, it amounts to plus 10.05. Now, if I take the mean from stats and I multiply that by the number of days in our data set, which is just shy of 500, well, when I do that, the result is 10.05, which is exactly the same as the cumulative sum of that column. So all of that to say, I believe stats, many of these stats at the very least, are just simply being derived from this column of percentage daily returns from our trading rule. And by the way, like I mentioned before, adding the word percent doesn't appear to make any difference. Percent appears to be the default setting. The figures here, percent.stats, are the same as if I just deleted percent. Other things you can do with my account are myaccount.sharp, which is just extracting that statistic from this set of statistics, 0.745, 0.745. We can plot the cumulative account curve, which I presume again is showing the percentage change. And therefore I would conclude by the end of this period, based on our trading rule applied to the oil futures market, we would be up 10%. myaccount.curve.plot. We can calculate the rolling annualized standard deviation of my account and plot it, and it reaches a high of around 15%. More recently is down at 5%. Presumably, it is expected that given enough time, this curve would fluctuate around an average of 16%. Why 16%? Well, when I look at the underlying code for the profit and loss for instrument forecast function, which is shown here, I notice straight away that the default risk target percentage is set at 16%. That's why I think my theory is that given enough time, this blue curve would fluctuate around an average of 16%. By the way, I had originally hoped to dissect this function, this profit and loss function, one line at a time, and it starts off easily enough to follow, but it becomes really quite difficult, especially when you get down to this bottom block. I then found myself diving into a very long, seemingly endless chain of functions and classes. So I'm going to revisit the intricacies of this function in a video further down the line when I understand PySystemTrade much better than I currently do. We can plot also the drawdown percentage. Notice in this period here, where it's equal to 0, the trading rule must be consistently making all-time highs, but then from July, it has a bad time of it relative to the high watermark. So although we have a drawdown here, one might say that at least we were playing with the casino's money. We were giving back money that we had already earned from the casino. Again, the word percent is superfluous. myaccount.percent.drawdown is identical to myaccount.drawdown. We could repeat any of the plots above, but insert weekly, myaccount weekly curve plot, and the resulting figures and plots would then be expressed using a weekly time frame. You may recall that when I typed in myaccount.curve, which is based on a daily time frame, the shape of the curve was the same as this, but it was more granular. It was quite choppy. So I'm going to scroll up just so you can see that. Here it is. We could insert gross as an alternative to net. For example, myaccount.percent.gross.stats, thereby presumably giving us an assessment of the performance of our trading rule before deducting costs. But unfortunately, I can't explain right now why the differences between myaccount%.net and myaccount%.gross are what they are. For example, the mean net of costs 0.0225 is higher than the mean gross 0.0219, which is counterintuitive versus my expectations anyway. And it's also a little curious that median is exactly equal to 0 when we call gross stats. So something to have at the back of one's mind, and I'm sure I'll revisit it later and figure out what's causing those differences. That's all for this video.